Welcome to episode 1 on how to actually make money trading. I'm going to teach you exactly how I do it. I'm going to teach you exactly how and what's the proper way to do it, so you yourself at home can also become a billionaire in 5 to 6 business days. Scratch out that last part. Of course, that was, an attempt at being a joke, because that's not actually a thing, and anybody who's trying to teach you how to make hundreds of thousands of dollars in a matter of minutes or hours or days is a liar and is selling you a lot of bullshit. But if you're looking for a realistic approach, and if you're looking for something that's sustainable, long-term, measurable, and realistic, this is your video. Anyways, back to the point. We're going to focus on 3 things. It's going to be plan, execution, and journaling. Those are the 3 most important steps when it comes to trading, when it comes to retail trading at least. And that's what we're going to focus on, because that's what we are. We are retail traders. We're not hedge fund managers. We're not banks and institutions. All we can do is sit at home, watch the charts, and click some buttons. So let's start off with that. So starting off with the plan part of things, and this is actually where most retail traders have issues, because they don't understand what they're doing. They don't understand what they should be doing. They don't have exact metrics for their plan to work, or for them to execute it, and for them to journal it, right? So no matter what they do, no matter how hard they try, they simply cannot make money. So on the plan side of things, you're going to want to have a strategy, a set of technical parameters that you execute your trades upon. You also want to have a risk module with exact metrics of your entry, of your exit, of your stop loss placement on break even or in profit or whatever. And of course, the most important part when it comes to risk management, position sizing, because that will determine whether you lose money or win money in the grand scheme of things. Especially if you want to trade funded accounts, you're going to want to have an extremely good risk module, or your position sizing, because of strict rules, strict drawdown rules, strict daily loss limits, etc., etc. Now, I know a lot of this actually sounds extremely complicated, especially to the newer guys, to the beginners, but really just bear with me, or do some external research in your own time. Not right now, of course. I need you to focus on this video. Click like and subscribe. The best way to go about it is simplicity. For the strategy part, don't go discovering space again. Just find something that's extremely simple. Most likely that's going to be a trend following system that's going to be based on, I don't know, support, resistance, supply and demand, whatever. Just don't go too deep. Don't look for 5 time frames, 11 confirmations, blah blah blah. All you need is a very simple entry model. A lot of the times that's just going to be, like I said, supply and demand. You buy low and you try to aim high in a bullish market, and vice versa in a bearish market. Just do some research on YouTube. There's a bunch of systems, a bunch of strategies that you can adopt very quickly, very easy, right? And they're very simple. You don't need a lot of knowledge to actually understand what's going on. Please try and avoid ICT, SMC, all of that stuff, because it's way too complicated. And I'm not saying it doesn't work or it's bad. I'm just saying that it doesn't make sense for a beginner trader, or literally anyone, to spend hours looking at the charts, drawing these, I don't know, made up terms, change of character, fair value gap, divergence, etc., where trading can literally be so simplified. Just follow the trend, find a good place to enter the markets, I don't know, either mathematically wise or whatever other technical aspect that a strategy that you find will require. But you don't need to overcomplicate things. Do yourself a favor, and strategy wise, keep it simple. Next, focusing on the risk side of things. Again, let's keep it simple. There are plenty ways to manage risk. Some of them are static, some of them are dynamic. For now, just focus 1% risk per trade, right? So no matter how big your stop loss is, all you have to do is calculate your position sizing over that stop loss amount for your capital to be exposed 1% per that position. Don't go, I don't know, don't go designing a scale-in plan or whatever. Keep that stuff for a later time when you are better at trading, when you're actually making money or whatever. Let's just keep it simple for now. Do 1% per trade, which is the retail industry standard, and most of the examples online are built upon cases like that, so just focus on that. And since we're trying to keep it simple, let's also keep the targets and the stops pretty simple. Let's say you're going to want to target a 1 to 2 in risk to reward, meaning you risk 1% per trade. If the trade is a loser, you lose 1%, and if the trade is a winner, you gain 2% on that particular trade. Now, what that allows you to do is basically win, I don't know, 40 or 50% of the time and still make money. So for those of you who don't understand what that actually means, is that out of 10 trades taken, you only need to win 4 for you to actually make money. And for this example, let's also just say we're going to avoid break-even trades. We're going to do a 1% loss or a 2% win every single time, right? So that means once you see an opportunity in the markets that fits your strategy or your system or whatever you want to call it, and you open that position, you set your stops and you set your take profits and you walk away from the table, and that's it. That's how this system is going to work. So now we have a plan on how to strategically approach the markets. We also have a plan on how we're going to manage risk. Of course, we're going to go a little bit more into detail for both of those, but we're going to do that in the next episode, where I'm going to actually show you a strategy. I'm going to pick a strategy, exactly explain the details, how it can be extremely simple, extremely easy. I'm going to exactly explain the risk module situation. And so what we have left to do now is the journaling part of things, what I also mentioned, earlier in this video. You have to journal your data so that, once you take 10, 20, 30, 50, or 100 or, whatever trades, you can actually know and tell what you've done good, what you've done wrong. You can show your results. You can actually see, what your system is like, and you can actually improve based on that data. Now you know that a trading system can be extremely simple, that a risk module can be extremely simple, and that journaling, is of course extremely simple as well. I'm going to show you exactly how to do all of those things, but I don't want to make these videos 2 hours long, so I'm just going to do more of them. This is the intro video where, I spoke about what we're going to do, and in the next episode, I'm going to show you, I don't know, a strategy, and perhaps we can start touching on the risk aspect of things. And then in another episode, we're going to do journaling and data analysis. Oh yeah, again, like and subscribe. Bye.